Hello again, traders, and welcome back to the Pro Trader Network. If you recall in the candle pattern video, I mentioned a video that would bring some clarity and definition into our observation of candle patterns. This is that video. We're going to be getting specific and further define some of the more common candle patterns. All right, traders, we know that when we look at price action, we see patterns, and we also know that these patterns represent the repeat behaviors of traders in the market. We also have to realize that nothing in trading is absolute or exact, so we have to ask ourselves, how can we create an edge out of this uncertainty? And then if we're trading candle patterns, what can we do to trade the best pattern setups? Well, the answer is we really have to try to bring more clarity and definition to what we see in those patterns. So how do we increase our edge? Well, we're going to look at the patterns we typically like to trade. Let's look back at the most reliable patterns that we trade as they apply to our trade plan and our rules. And then let's define the price action, the ratios, and the breakouts of those patterns so that we'll recognize only the best pattern setups as they apply to our trade plan. And by reliable, I mean the ones that we easily recognize, the ones that work with our trade plan and rules, and the ones that we trade with consistency and profitability. So I put a list together of some patterns that perhaps we could better define, and these are the patterns that I like to trade. Look at this list and then ask yourself, what is your definition of each of the above patterns? Traders, clarity and definition is really about getting specific. So let's further define these patterns that we do trade, and then we can also take a look at others that we may want to add to our strategy. Creating these definitions are going to add to our edge and increase our winning percentage. We need to be very specific in our definitions to remove any doubt from our future analysis when we look at these patterns. So let's take a look at some of these patterns and some of these definitions. These are some of the definitions I use when I observe these patterns. All right, traders, we're starting here with a double top. So when I look at a double top, these are the 5 things that for me define a double top. My RSI must be in the overbought zone on my TDI indicator. That means it's above the 68 level. The Fibonacci retrace from the first top must be a minimum of the 382 level before forming the second top. There must be a minimum 5 candles closed between tops. The second top must at least wick the high price of the first top. Wick means that it'll just approach that price. It may close below that price, but in that price action, it at least reaches that price of the first top. The second top must also create bearish divergence. So when I see a potential double top forming, I look at my candles and then I run through this set of rules. If this set of rules is present, for me, that defines a double top and a potential trading opportunity. Let's take a look at a double bottom. And the double bottom, it stands to reason, would follow some of the same rules. The RSI must be in the oversold zone, and that is below the 32. The retrace from the first bottom must be at least at the 382 level. There has to be a minimum of 5 candles between the bottoms. The second bottom must at least wick the low price of the first bottom, and the second bottom must create bullish divergence. The trade opportunity would be the cross of the RSI above the TSL, which would be the first gray candle after the low at 2. Let's take a look at a 1, 2, 3 top. The outside return that forms the swing at 3 must be a 618 retrace of the leg from 1 to 2. Price has to break below and close below 2 by at least 10 pips. There has to be a cross of my RSI and TSL. That would be my entry signal of that trade. I would confirm that price is broken below and closed below 2 by 10 pips, and that 3 is the 618 retrace of the 1 to 2 leg. Here's a 1, 2, 3 bottom, and as you might suspect, the same rules would apply. The swing formed at 3 must be a 618 retrace of the 1 to 2 leg. Price has to break above and close above 2 by 10 pips, and there must be a cross of my RSI and TSL. So the long signal here, traders, would be my RSI crossing above my TSL on the bullish candle that forms after 3. Here's how I define a head and shoulders pattern. My RSI must be in the overbought area. The right and left shoulder highs must be within 10 pips of each other. The right and left neckline must be within 10 pips of each other, and the head of the head and shoulders must create bearish divergence. So you can see I've drawn two horizontal lines here on this example showing that the right and left shoulders and right and left necklines are within 10 pips of each other. You can see I've used my trend line tool to show the bearish divergence. Now the inverse would be true, traders, on an inverted head and shoulders. The RSI must be coming out of the oversold zone. The right and left shoulder lows must be within 10 pips of each other, and the right and left neckline must be within 10 pips of each other, and the head has to create bullish divergence. I think it's fairly obvious, traders, that when we see an inverted head and shoulders, it would be the inverse of the rules that apply to a head and shoulders. So now that we've further clarified and defined our patterns and possible setups, we can move forward with more confidence and more knowledge when we observe these patterns. We're going to ignore these patterns that don't represent the highest probability. And by examining this clarity and performing this definition, we've now enhanced our trading plan and we've increased our winning percentage by only taking the best-in-class trade opportunities. Traders, I cannot emphasize this point enough. This type of work is exactly what professional and profitable traders do. They do absolutely everything in their power to create this clarity and definition in their trade plan so that they can enter the market with confidence and execute their trading plan and rules without hesitation. So you need to ask yourself, if you're not doing this type of work, if you're not doing this type of analysis, how can you possibly compete with traders in the market that do this every day with discipline, control, and commitment? The answer is you can't. But the good news is you can apply the same principles and the same processes that they use to make yourself a highly successful and profitable trader. As always, traders, great to have you back here at the Pro Trader Network. Stay focused, follow your rules. We'll see you next time.